Good day and a warm welcome to Day 3 of our 2022 Virtual Candy User Seminar. I am Evilio de Abreu, Head of Customer Success based out of our Pretoria office in South Africa. We'd like to thank you, our Candy users from all over the world, for joining this seminar series on how to step up your game by applying the 3 principles of effective cost control. Today is Day 3, the last day of our user seminar. Day 1, we discussed establishing good base. Yesterday, we covered knowing the current status of a project. And today, we're unpacking the last principle, knowing where the project is heading. If you missed the first 2 days, don't worry, because you'll receive an email with a link to view the recordings. Due to the time constraints, we won't be able to answer any questions while the event is running. But please use the question function on screen to leave your questions, whereafter a consultant in your region will get back to you. We also have a feedback form at the end of the session for you to post your comments, questions, and for you to take up our promotion on offer. Today, we have Jared Halbert presenting the 3rd principle of effective cost control. Jared is from our UK office. He is a registered project management professional and has an MBA and a master's equivalent in construction senior management. He started his career as a project engineer, 12 years of construction industry experience behind him, majority of which has been out on the field. He has a passion for efficiency and sustainability. In his free time, he enjoys trail running. Take it away, Jared.
Thank you for the introduction, Evilio. A warm welcome to our audience and greetings from our ROB CCS office in the UK. It's my pleasure to present Day 3 of this virtual seminar to you. To recap, on Day 1, we covered how to finalize the budget in Candy and how the original base forecast is established, which is represented by the black line. Day 2, we covered the post-tender stage or execution stage, where the progress information was updated via evaluations to see the allowable or earned value to date, remaining, and at completion, which is represented by the green line. Today, Day 3, we will be covering cost reporting and earned value management, where we will be bringing in the real cost to date into Candy and analyzing cost remaining and cost at completion using Candy's cost rates and cost worksheets, and this is represented by the red line. Before we begin, I would like to highlight some benefits of using Candy's cost and allowable for cost reporting. Firstly, it is to monitor the financial performance of your projects as accurate as possible. Secondly, is when using the Build Smart accounting system, real-time costs can be sent to Candy at a cost and task level, also known as activity-based costing. Or if your accounting system can capture cost by task, activity-based costing can be achieved. Thirdly is the cost at completion analysis using Candy's cost rates and cost worksheets. Simply put, you don't have to wait till the end of the project to know if you have made a profit or a loss. The agenda for today: firstly, we'll be looking at the cost and allowable by period, cost import, cost rates, cost worksheets, earned value graph with to-date progress analysis, variation orders, link BOQ to the program, and importing forecasts from a program. The first item on our agenda is cost and allowable by period. We'll be selecting the cost and allowable tab and opening the document manager and opening the document 1.1 cost and allowable by period. You will notice that the cost of the project haven't been imported yet and that we are looking at the cost and allowable by period document on a cost code level. Now, looking at the column layout and to give you a high-level overview of each column, the first being the to-date allowable, which is generated by the actual quantity multiplied by the net worksheet. Remember, actual quantity is based on measured work done on site to date. To-date cost. These are imported costs from accounts. These costs will come from your accounting system. Remaining allowable is generated by the remaining quantity multiplied by your net worksheet, which is based on the work done to date, less final quantity. Remaining costs is generated by the remaining quantity multiplied by cost rates. Cost adjustments to either resource rates, production, and waste during post-tender can be applied to reflect remaining costs. Later, I will touch on cost rates and cost worksheets. At completion allowable is generated by the final quantity multiplied by the net worksheets. And lastly, at completion cost is generated by the to-date cost plus remaining cost. If you wish to analyze your cost by task or task by cost, note that this document can be customized, and a task code column can be added, which I will demonstrate after we import the costs. Next on the agenda is importing costs. To do a meaningful comparison with costs from accounts, it is essential to import all costs incurring, including any accruals to date as per the close of cost date. Valuations of actual quantities measured month to month from the 25th to the 25th of every month should coincide with the close of cost date. To import my to-date costs, I will open the Cost and Allowable Document Manager and open Document 3.1 Cost Import. Once open, to import my costs, I have the following options. Under Tools, Import Cost to Date, Import from File, Import from BuildSmart, Import from Materials Received, and lastly, Import from the Subcontractor Manager. I've chosen to import my costs from a file. This is when you have your costs from an accounting system exported to an Excel file. Then you can use this option to import that information into the cost import document in Candy. We select the import from file, browse, and there's my cost to date period 1. And I'll select Start Import. Candy will ask you to identify the columns. So this is used to select headings that match the imported information. I've identified the task codes, followed by the cost codes and the real cost to date. Select OK after the file import has been completed. When the import is complete, the imported information needs to be checked against the Candy information for differences. The check is used to verify if all the imported cost codes exist in the Candy job. So we can select check import data and tick the first two, cost code and task code. Now, if the imported file contains data with cost codes that don't exist in the job, a job message will be displayed listing which lines have failed. In this example, failed code on line 1, we'll select yes. A message comes up saying one invalid record found. You can see the heading structure has been imported from the Excel spreadsheet that is not defined as codes. So I'll highlight and delete this unwanted information and abandon the filter and select yes. I will run another check to ensure the validation is successful. So we can select check import data and tick the first two, cost code and task code. The validation is successful. Please note that if there are any undefined or invalid codes imported into the imported document, the validation does not come through successfully. The system will not allow you to release the costs for cost unallowable. Now let's look at some adjustments. Several columns are provided so that adjustments can be made to the imported costs. These adjustment columns are used by the site team to make further cost adjustments to reflect the situation on site. If we look at the reallocation column, site was incorrectly charged for fuel used by the external plant hire company, so 2,000 was deducted from fuel and 2,000 reallocated to external plant hire. Please note that the bottom figure needs to be zeroed out, otherwise the system will not release the cost for cost unallowable. The subcontractor liability column is to make cost provision for outstanding payments not processed in the accounts. There's an amount of 3,000 that is outstanding. Accruals are a charge of material or materials ordered and already received and used by the construction site team, but the material has not yet been invoiced. So provision can be made at the end of each financial period. And lastly, let's have a look at the notes or remarks column. Notes are very useful for any changes that are applied on this document and can be given to accounts to rectify where the reallocations were done. So in the next close of cost period, they should be correctly aligned. Any adjustments that are inserted will contribute to the final actual cost, and the actual cost will be released to the cost and allowable analysis. Now that the adjustments have been made, the actual costs can be released for comparison with the allowable. Take note, at the bottom left of the screen, it says not released for costs and allowables. Now, costs have been released. If I make any changes or make any adjustments, I will need to repeat the process again. Now that my costs have been released, I'll open the Cost and Allowable Document Manager and open Document 1.1, Cost and Allowable by Period. As you can see, my to-date costs have come through. Keep in mind that we are viewing this document at a cost code level. I can clearly see that we're in a negative of 134 for general labor, a negative for external plant hire of 4,384, and a positive of 2,376 for fuel. To analyze cost by activity, I need to customize this document. As mentioned previously, I can customize this document by adding or removing columns. Select View and select Add or Remove Columns. Select Task Code and add it to the selected column list by selecting the green arrow. Press OK. Now I can drill down to a task code level and analyze and pinpoint exactly where I'm experiencing major losses. I can see the activity clear site and the general labor is problematic, and so are the activities clear site and excavations under external plant hire. Next on the agenda is cost rates. Candy cost rates or worksheets are used to make cost adjustments to the remaining costs during the post-tender stage. changes can be made to resource cost rates, production output, wastage allowance, and construction methods. Note that this function is used in forecasting at completion scenarios. Firstly, we'll have a look at resource cost rates by opening document 7.1, Resource Cost Rates to Completion, in the Cost and Allowable Document Manager. For this example, we're going to look at two resources. Diesel is a good example, which is one resource that is not regulated, and we'll add cement to this analysis. We'll do a quick filter by clicking on the description column header and start a new filter for these two resources. We're going to reduce the list by keeping diesel, and we're going to add to this filter by applying a filter to the previous filtered column by selecting the plus button, and we're going to increase by adding the OPC bags of cement. Now we have our two resources for the analysis. Before we make any changes and explain the resource cost rate, I'm going to open document 6.1, Bill with Cost Rates for Cost Worksheet Adjustment, to illustrate how the cost worksheet is affected if we make changes to the cost rate. Now both documents are on a split screen and we are looking at the brickwork under the substation. Looking at diesel, I have an allowed budget or remaining amount of 377,324. As soon as you set up your valuation or come into post-tender, all your final rates, which is your net rate, gets reflected as your cost rate. But should there be any price changes, like in our example, the diesel has increased to 9.90 per litre, we can make that change to our cost rate. You can see the remaining cost amount has increased from 377,324 to 415,369. And if the cost of my bag of cement increases, I will change my cost rate and not my final rate, which in turn changes my remaining cost amount. We can see from these figures that we'll be experiencing a loss by looking at the remaining quantity and the remaining quantity cost amount. The changes I've made to the cost rate will only apply to the cost worksheet and not the net worksheet. Now looking at the resource cost rate, we can see that we will be experiencing a loss of 33,400 for cement, and it carries through to completion. And fuel will be experiencing a loss of 38,046 and a further loss of 35,670 at completion. Next on the agenda is cost worksheets. We open the document 6.1, Bill with Cost Rates for Cost Worksheets Adjustment. We hit Calculate, and you will see just by making any changes to the cost rate for cement, it already indicates that I'm going to experience a loss of 2,862 on item A, as well for item B of 3,618. So this shows that the cost rate has been applied. Now, before I open the net and cost worksheet, I will lock all net worksheets to prevent me from making any changes to the net rate. At the bottom of the document, I can select the up arrow, which gives me three options to select from, and I will select the last option, Net and Cost Worksheet. As you click on it, it opens both worksheets. The net worksheet is sized to the top half and has been locked, and the cost worksheet has been sized to the bottom half. We can see the cost worksheet is identical to the net worksheet. We know that the cost of cement increased, and we can see our mortar mix on the net worksheet is 368.43, versus 407.40 in our cost worksheet, where a bag of cement was increased to 45. Remember, this cost worksheet allows me to input information such as production output, wastage allowance, and construction methods can be changed within this worksheet. So if I have not allowed for any resources during my pricing for one brick wall, I can therefore open my resource list and drag the resource into my cost worksheet, and my total rate will increase. For this scenario, I'm going to assume that there is less production by the site team and an increase in waste. You can see a further increase in the rate from 199 to 222. But if we get together as a site team and we agree to push our production and manage our waste, we can still make money. By increasing the production from 600 bricks per shift to 800 bricks per shift and decreasing our waste from 10% to 7.5%, you can see that it is possible to make money. We select store worksheet, and there you can see we have a positive value of 38,519. This function is very handy when forecasting at completion scenarios. So no need to wait till the project is nearing completion to find out that you will be incurring an overall loss. We will do the same for item B and ensure we better our production and watch our waste. So increasing our 500 bricks per shift to 800 bricks per shift, and watch our waste and keep it at 10%. As you can see, we're making money on these two items simply by managing our production rates and our wastage. Let's look at the document 1.1, cost and allowable by period. We can see additional positives under my remaining for general labor, sand, and bricks. Next on the agenda is looking at the earned value graph with to-date progress analysis. We're opening the document 1.1, cost and allowable by period. To view the earned value graph, we need to select the graph at the bottom right-hand corner of the document. Candy has two terminology settings. You can see at the top left of the document that it's set to the cost and allowable terminology. We have the option to change the terminology to earned value by selecting data, terminology, and earned value. You can now see that the terminology has changed, and we can see that the relevant indices relating to earned value management. We also have the option to select how we see the data. I'm going to turn on the indices values by selecting Show Indices Values. Looking at data values with indices, plan value is derived from the baseline being generated by the link between the bill and the program. Earned value refers to the value of work earned to date in accordance with the actual quantities measured multiplied by the net rates in valuations. Actual costs being the actual costs we have imported. Cost Performance Index, or CPI, being the earned value to date divided by the actual costs incurred to date. Cost Variance, or CV, being the earned value to date minus the actual costs incurred to date. Looking at the to-date data, we can see that the CPI is sitting below 1, and the cost variance is a negative value, which means we're running at a loss to date. But because we use the functionality of the resource cost rate and the cost worksheets in Candy, we were able to see the impact of the increase in cost of the resources had on the project, and we're able to better our production and watch our waste to be able to turn the project around and end with a CPI of 1.01 and a positive CV, or cost variance, of 52,686. Next on the agenda is variation orders. If there is a change in scope or additional work required, we will need to allow for the work and make sure we get paid for the work done. We're switching across to valuations and opening document 3.1, variation order pricing. Now the document is open, we'll open the page index and select a new page to record the variation order. You can see I've created the headings and the item of the VO. The price code has been generated and I've put the value of the VO in. I need to allocate a task code to the VO item, opening document 2.6 task coding. Now that I have my task coding document open, and can go to definition and settings and look if I have an existing task code for a similar activity. As you can see, we already have a task code allocated to clear site, so I'll allocate task code 0100 to my variation order. Now task code is allocated. The next step is to create a VO code in definition and settings under 3.2 VO codes. We can also add an external hyperlink to attach a site instruction or whatever relevant document is needed. Once the VO code is created, we can allocate the VO code to the VO by right-click on the header and there we go, the VO code has been allocated. I have the option to mark the VO as approved or unapproved if I'm still awaiting for approval. Now the VO has officially been logged. Document 3.2 shows that the VO has a BOQ allocation. Document 3.3 gives us the financial summary of the VO, highlighting the final net amount, actual net amount, claim selling amount, and actual cost remaining. Document 3.5 gives us an overview of all our variation orders. Next item on the agenda is linking the BOQ to the program. Once we have updated the BOQ with the VO for the additional work, we need to link the updated BOQ to the program to have the program reflecting the additional work and to be able to forecast accurately. Switching to link and forecast and opening the latest program. We need to open document 3.1, BOQ with activity allocations. And we can see the VO as a bill item, but we don't have an activity allocated to it. I've sized document 3.1 to the bottom half and opening document 2.1 standard bar chart to get access to the activities in the program. Once opened, I will size it to the top half. And now that I have both documents on a split screen, I can allocate the clear site activity onto my BOQ item by simply dragging and dropping it. Now the VO has been successfully linked to the program, the last item on the agenda is importing the forecast to the program. We need the updated information from the program that indicates the VO to be able to forecast accurately. Switching back to cost and allowables, I'm opening document 1.1, bill with quantity forecast under financial forecasts. Select tools and select import forecast from program. Select the latest program. Now we can see the quantity forecast has been updated from the latest program, Progress Update 1, and we can expect an additional 650 squares of clearing site in July and 350 squares of clearing site in August from the additional work that we have recorded. To look at the forecast, I'll open document 1.2 allowable amounts forecast. And we can see that the to date remaining and a completion allowable amounts have increased, and so have the forecasted amounts. We can see that the indices are reflecting the additional work that has been captured. We have reached the end of the presentation. Thank you for your time, and I trust you found these features useful in your daily use of Candy. Please reach out to our local RIBCCS officers if you have any questions or need any additional information. Over to you, Ovidio.
Thank you, Jared. That brings us to the end of our virtual Candy user seminar. We trust you enjoyed the seminar. Don't forget to fill in the feedback form and take advantage of our seminar promotions. You're also welcome to leave any questions or comments, and one of our consultants in your relevant region will get back to you. Thank you and good day.